What's up everyone, welcome to the channel. In this video you will find a lot of free education. Make sure to subscribe because every week I share some free education here on my YouTube channel. Now, as you know, I'm mainly a smart money trader. My strategies are based on smart money, but we need to talk about it for a second. Smart money has great concepts, but at the same time, as you know, 90% of traders are still losing money, and you might wonder why they're still losing money. Of course, psychology has a role in this, but also I will say that smart money by itself is not something that makes you profitable. The concepts are great, but by itself they don't make you profitable. Actually, constructing and developing a system that works and has an edge on the market is what really makes the difference. I hope that you can really find the informations that you need in order to become successful just by looking at my free channel, but at the same time, in the description below, you can find the links to actually join my course. My course, both the 1.0 and also the 2.0, is included with any membership from the monthly all the way to the lifetime, or also there is the option to have some one-on-one lessons. So make sure to check my website, and then I'll see you on the video. Many people want to see that. So I will do two of them actually. One in something that already happened, so already on this that already happened, and then I will also do it for possible opportunities now. So now, why did I take those trades on CAD/JPY? So we were in this uptrend. Let's start from higher time frames, 4 hours, okay? And this is the analysis. We have breakout structure to the upside, demand is respected, okay? Then we have breakout structure to the upside. Here it is actually breaking. We go check on lower time frames if it is breaking. Not with a candle, so it's not an aggressive breakout structure, but still this area fails, demand is in control, okay? We go back to the 4 hours. Wait. Okay. Then what happens? We break structure again to the upside here, and we are expecting this demand area to hold. We go on lower time frames to refine this demand area. So maybe 2 hours, we find the demand is this, and this demand area fails. When demand area fails, supply is in control, or we can consider also this as a breakout structure to the downside. Okay, we have a breakout structure. Supply is in control. Supply area, okay? Supply area with also imbalance. We arrived to the supply, and I was looking for sells. So we go on the 1 hour. After touching the supply area, you can just put an alert. We go here, and we are looking for confirmation. So we go lower. We have aggressive confirmation with this battle between supply and demand, this demand failing as higher time frames, this supply being in control. Okay. Now, could have entered here, could have entered here with some drawdown. Anyway, I will put my stop loss above this high, not this, above this high. And that's what I did actually with my trade. So let's say we enter here, or another possible entry. We have 3 possible entries. We have premium and discount. We enter here. Stop loss above it, bigger stop loss, 35 pips, not really something that I like. We enter at supply here, we stop loss above this. Okay, better. Then we go back on higher time frames, checking what's up. Okay. Of course, risk reward changes. This is a 1 to 7, this is a 1 to 3, same target, depending on how good of an entry you can get. Now, possible other entry is again break of structure to the downside. Here, this demand fails. Supply is in control. Now, a lot of people ask me, why do I take the whole move to the upside? Because supply as definition is the last up move before the down move that breaks structure. Here we break structure. Here is the last up move before the big move to the downside, and it is the whole up move. So the whole supply, even if I go on higher time frames, I can show you. The whole supply is this, okay? The refined supply is, of course, smaller. If I go on 15 minutes, if we refine it, of course, is smaller, it's just this. If we take the whole up move before the down move, is this. And here could have been another entry with stop loss above the area. And that's it. This is from higher time frames to lower time frames. If you want either this was actually on the 50 minutes because we started from the 4 hours. If you want even further confirmation to refine it even more, we got 3 minutes. You can go 1 minute even. I just like the 3 minutes specifically. Just personal preference. There is no secret for the 3 minutes time frame. It's just personal preference. Here. 1 second. Okay, so this could have been our confirmation. Here we have break of structure to the downside. I would have put my premium and discount, and in this case we don't touch the 0.5, therefore I would have missed an entry. But this could be your refined entry from here with stop loss above this area. We just didn't tap into it by 1 pip, just showing you. Here, we touch the area, we drop to the downside. Again, we don't retrace to get an entry, but it's the same concept. Premium and discount, we never retraced after we broke this previous demand, okay? We come back here, and here we have our entry confirmation. So instead of having 20 pips of stop loss, we can get, so as you can see, higher high, higher low, higher high, lower low. Here we break, demand fails. You can either do 2 ways, and this is 2 possible entry types, either supply or 0.5. Of course, one is more refined, more accurate, one is less. Let's say we don't get the perfect entry from here. Let's say we enter at 0.5, stop loss above the area, and this already becomes another type of risk reward ratio going to lower time frames. Let's say we don't hold all the way down, and maybe we close at this demand, which would make sense and which I would do. This is bigger trade is 1 to 3.3. Smaller trade with lower time frame entry would already be a 1 to 12. Okay, so this is the whole reasoning behind it. Okay, now for possible opportunity, now we go over, let's see, we wouldn't even know what to go over right now. Let's see. First, I need to find something that is giving an interesting, an interesting setup. So, nope. We can do AUD USD, perfect. 4 hours, AUD USD, 4 hours. We can see that we were in this uptrend. This uptrend comes to an end and we start a downtrend. We don't only start a downtrend with possible entries here, where we have this break of structure to the downside. with supply being in control. Honestly, I missed this entry because I was looking at this supply, but it's okay. We also fail this demand. This demand fails, and therefore we are expecting, we have also break structure here to the downside. We are expecting continuations to the downside. Now, these continuations to the downside can come from any area of this move to the downside that is breaking structure. So we have possible entry area, possible entry area, possible entry area up here, possible entry area here. And these are all 4 hours. Now, if I go to the 1 hour, it would be honestly to go against the trend, but it's not the best option. So in any move that I could get involved in the way here, possibly maybe here with lower time frames confirmation or whatever. This is not something that I did or that I often do, but I'm just showing you. Now, we are at the key area. What I will do is go to my 5 minutes and look for a good confirmation that we are changing structure. So if we break to the downside, this will be aggressive confirmation for me that we break this area. This will be better confirmation if we break all of it right here. Okay. So if, for example, we see something like this, then I will look for a retracement to enter sells. Okay. So this is the reasoning that I do overall.